All right, everybody hears me?
Yep.
What happened today?
Yep.
What the heck happened today? Are you guys not seeing the opportunity this market is giving to us? And I'm driving around. Let me recap today's action. And I okay. Today I started with an account that ended up yesterday at $7,000, 7,000 and some change. Originally, that account was open with $2,200, and from 2,200, it's about 4 weeks old, give or take. From $2,200 and went all the way to 7,000 and some change, like 200, 7,300. Okay. So today the opportunity set up to do some power plays on that account. I want you to understand something. There are a lot of people out there that says that all sounds good. That's impossible. That cannot be done. Oh, the haysayer and no, no, no. Okay. The only reason I did this is so you can see it live on yes, it can be done. Okay. And all those people saying that it cannot be done or that's one time, that's a lie. Okay. I do this almost every quarter, 3 times every other on the third month, every 3 months, more or less. Okay. Within a year, these opportunities present themselves multiple times, 2, 3, sometimes even 4 times. It's just that you have to know when to strike. We didn't strike going down, which we could have. We missed that one. Okay. But this would have been a double dip, striking down plus now striking up. So just keep aware of that. Bank of America and all the banks, you have to understand the concept and the mechanics of what's going on. When interest rates go up, banks go up. That's a given. Banks like high interest rate because in return they pass the earnings to the loans that they pass out with a higher interest rate. Okay. The first play that I did was Bank of America. And the reason that I did the Bank of America play, which is this one right here, was Bank of America's options were lagging. They were not inflated yet for the spike that it had just done. So I was able to double dip on this one to where it went all the way to 100%. I got out, I took my profit, and I got back in. Again, we also set up an Apple. Apple has been beaten up from 180 to all the way, I think, to 150, 160. I think it was a lot. But the thing with Apple that you have to take a look at is that even though the market has gone down over 11%, Apple has been bellwether and has been holding at certain levels without selling off like the rest of the stocks, like Shopify. Shopify has like a 50%, pullback that it did. So understand that. Same thing with Amazon. Okay. Amazon, as soon as it announced the 20-to-1 split, you have to understand the sentiment and the investment mentality that if you hold Amazon and you're about to get 20-to-1 split, will you sell for profit what you currently own in Amazon? The answer is no, because you're about to get a lot more shares on a company that go a lot higher because Amazon is a strong company, period. Okay. So you need to be aware of that. Okay. When those plays set up, Google was the same thing. When those type of companies make those type of announcement and they're strong companies, solid companies like Apple, Amazon, Google, you know, those are easy weekly credit spreads. Easy weekly credit spread. Okay. It's almost impossible for you to lose on one of those. Okay. Even with all the turmoil that you've seen, okay, these companies have been able to withstand the drawback of the S&P, the Nasdaq, and the Dow. They've all been able to withstand it. Okay. So you have to understand and ask yourself if these companies are strong enough to hold certain levels and certain support. And while the market is correcting 10, 11%, these companies are only down 5, 6, 7%. You have to understand and ask yourself, when the market bounces, how much will these companies bounce when the market bounces? And now you're getting a 20-to-1 split, on whatever shares you are holding. Okay. So understand and get into the mentality of what's going on in this market. Okay. I still believe that this market is going to fake out once it gets to all-time high or near all-time high. Okay. Still see a 30 to 50% drop from near all-time high. The reason I say that is because there's too much turmoil on the market. Okay. And this is not going to get fixed overnight. If you go back to the market, I believe it was in 2008 when Alan Greenspan started increasing aggressively on interest rate, the market went down big time. Okay. It's not going to happen overnight. It's not going to happen in the next day or two. It's not going to happen in the next week, but keep aware of that. The VIX needs to be under 20 in order for this market to be bullish. As long as that VIX does not stay under 20 for this market to stay bullish, we're going to grind up, but we also have the possibility of coming down hard and in lower low from the last low that everybody's calling a bottom now. Okay. It does not mean that you cannot capitalize on these movement. You can, and you have to learn how to take advantage of them. Okay. But again, these are not moves that you're going to overall hold for 15, 20 years. These are moves that you're going to hold for a couple of days, a couple of weeks, get your results and get out, and then set up for the next move coming up. Okay. So I have introduced you guys to several other plays other than credit spreads in order to introduce to you opportunities that develops during all these commotion, and how much more return on investment you could get on your money, even though the turmoil on the market is the way it is. Any questions so far? Okay. This was an account that ended up yesterday. Today in the morning, the account was up $830 on a trade that I put in together. Okay. And this is the account. This was the balance of the account as of yesterday, March 21st, 2022 at 4 p.m. Eastern time when the market closed. Today in the morning, I had some overnight trades that I put and gave me a profit of $830, making the account go over $7,000. Okay. During the time, I told you guys I'm going to double this account by Friday with a credit spread. Of course, I did it before Friday, and possibly by Friday, I will probably either let these credit spreads worthless or get out because I got some other plays that I want to do on this account before Friday. Okay. Here is how the day started progressing on this account. One of the key plays that was made on this account was a Tesla credit spread. This account was basically leveraged for the full amount on this credit spread right here. Okay. You ask yourself, how is it that a $7,000 account is able to take 31 contracts of Tesla? The reason is that we're getting almost $2.50 to almost $3, over $3 on credit on Tesla. Okay. So the amount risk is only on the first trade about 240, and on the second trade, that's 3, 4, 5, about $160 per contract. So because there's only small risk, because of the high premium that you're getting, your margin goes up and you're able to trade more contract. Again, these are trades of opportunities. These trades could also go the other way and blow up your account. Okay. The only thing with these trades is that because these options are deep in the money, they have intrinsic value. So the premiums are not gonna climb as quickly, okay, if the trade goes against you and you're able to cut quickly for smaller losses. The flip side is that if Tesla rallies like it did today, the intrinsic value gets deflated. And as you saw today, the credit starts going down as the premium goes down and your credit's getting more in your favor. On this account, I also took a bullish play on the 45-45 call, a straight call, and that is to play for tomorrow. I'm holding it overnight for a $6 risk. And since this account is under $25, I'm able to hold overnight. No big deal. It's not going to blow up the account. It doesn't disturb my sleep. And if tomorrow this thing goes sour, I'm still able to get out of this trade and I don't have to suffer a PDD trade. Same thing with Apple. We took an Apple weekly trade in order to build a bull ladder trade, which has a 3-day expiration, 10-day expiration, and I think the other one's like 14 days or 20 days. I will show in a minute. This trade was taken with our 2,000 to 60,000 in 12-month challenge. Usually on those type of accounts, I don't like trading these type of trades. I concentrate more on SPX, but if there's a give me scenario, I'm gonna take it. We're on the first day of the first week where we have to establish $220 for the week, and this will produce $460. This will give us a 2-week cushion in that account at $2,000, meaning that if there's no trade that is safe developing, we have 10 trading days to look for the next trade and still be on schedule for 60 grand in 12 months. Here you see the Apple bull ladder. Again, one contract, which expires Friday, and then we laddered up on other contracts. These contracts, when we first got them, were worthless. Nobody was trading them because Apple did such a large pullback that these calls got deflated. If Apple continues this rampage that it would like today, these calls and these premiums are gonna increase immediately. And within that, your profit margin will go up. This is the credit spread on the $7,000 account. That as long as Tesla finishes above 950, this is what I keep. Remember, the account started at $7,000. This is a $9,000 credit spread in 5 days. $9,000. Okay, not even 5 days because I put it in Tuesday, 4 days. So this is $9,000 on a $7,000 account in 4 days. This is a very, very aggressive trade. But within that aggressive strategy, there's also a large probability of success in my favor, only because things align. Things align. These a lot of these stocks are oversold, and a rally up is bound to happen. Same thing with Apple. On a weekly trade, this trade is over 100%. Same thing here, another 100% return on investment on Apple. This trade is only risking $300. The second, the 30 plus contract is only risking about $300. That's all you can lose. Your profit potential is unlimited for $300. I will roll the dice on this every day of my life when these opportunities present itself. I don't care who or what tells me otherwise. This is the overall bull ladder on Apple. Again, this trade was set up, I believe, yesterday. We set up these trades yesterday, and I loaded it on the miscellaneous trades. So this right now, you could take profit on this, and on all three trades, you'll be at 100% return on investment. This is how the account went from 7,000. So far, we had $2,800 at the time that this was screenshot. I left us the last four of the account number, so you can see it's the same account.
Hey, Jess.
Yeah.
Can you hear me? Hey, Kate,
yeah, I can hear you.
I dialed in a little bit late, so I apologize if you already covered it. But the opportunities that you talking about, how often do you see those happening? I mean, is this very, very rare, or is this like once in a lifetime? You know, or
No,
how often
three,
do you see
four,
that?
3, 4, 5 times a year. You just got to sit in front of your chair and look at them. This happens a lot of times. This is not a one-time deal.
And
this happens a lot.
And the indicator for those are, again, I'm sorry?
Basically, the indicators for these is market set. Remember, I said a long time ago, man, listen, one thing that YouTube and a lot of people on YouTube don't teach is market sentiment. Okay, what I call spidey sense. Okay, it's the gut feeling. That's the missing link for your success. You have to understand the sentiment of the market when things are happening and price actions are going, why the things are happening and why things are going. Listen, okay, there is no way on earth SPX should be rallying with oil at $110 a barrel. It's impossible. Okay, because one correlates with the other. Oil cannot rise and indices rise with it. It cannot. Okay, especially technology. Okay, because a rising oil is a red flag for rising inflation. It's less money on the consumer's pocket to spend. Okay, so it cannot. It's just simple microeconomics. It cannot happen. If the consumer has less money on the pocket, how are they gonna go buy more electronics or more or spend more in consumer goods if they don't have it? Okay, but this market is so oversold, okay, that the smart money are in an area or a level of price action where they're thinking 15, 20 years from now. They're not thinking tomorrow or the next day. But within that time of them acquiring these huge positions on the market goes up and you're able to capitalize with them. There's going to be a time that they're gonna stop buying whatever they're buying because they've already fulfilled their portfolio on what they needed, and then the market will do whatever it needs to do. But until that time happens, market rallies because of this situation, because these are smart money, retirement accounts, investors, money managers that are buying the bottom of this market with the anticipation to hold for the next 10 or 15 years on some kind of retirement account or some kind of investment account that they have long term. So that's why you're seeing a lot of these companies being scooped up at the levels they're being scooped up, because at the end of the day, you're buying wholesale right now. It doesn't matter if the economy tanks. At the end of the day, we always know that the stock market, just like real estate, will bounce. That's a given. It will bounce. Okay. So when you're buying for your portfolio and for your investment, are you going to buy on the top of the market, or are you going to buy on the bottom of the market? And if the market continues to go down, are you going to buy even lower because you know that the probability of a bounce and recovery are highly in your favor at these levels? So it's a no-brainer to acquire positions, in this market right now at these and lower levels if you're going to hold for the next 10 or 15 years. Within that time, we're able to capitalize on momentum swings within a week. Remember, these money managers and these institutions cannot fulfill their quota in 1 or 2 days. This is going to take weeks because these people are buying millions and millions and millions of dollars and millions of shares of companies. And because they have to blockchain them, they cannot go and say, hey, here's $1 million. Let me get $1 million worth of Apple, because then that will skew the price of Apple too much. So they have to buy little by little. They have to buy 5,000 share blocks, 2,000 share blocks, 3,000 share blocks, 1,000 share blocks. And this will go on for weeks at a time, depending how big the purchase is that they want to acquire in order to put on whatever account they're going to put these shares in. So these things, for most part, will take anywhere from 30 to 120 days. This is the GME play. I told you guys today, man, I am driving out and I'm looking at this on my cell phone. Okay. Wall Street bets are back. And they're pumping GameStop and AMC. AMC is actually a great play right now because AMC actually has good revenue because people are going back to the theater. So they're actually in a ideal situation to really rock it up. But GameStop, these people are pushing GameStop again. Okay. I gave this trade out. I said, this is a high risk, low probability trade. But if it hits, it's going to hit big. GameStop is $18 up right now in pre-market because one of the CEOs started buyback acquiring shares. This was a sleeper today. This trade was a sleeper. Tomorrow, this trade is gonna rock it up.
Yeah, I appreciate it. The explanation.
Yep. Here's the ticket on GameStop, so you can see at the time that it was. And again, the Tesla credit spread. Notice how the Tesla credit spread keeps going down because Tesla started rallying. Tesla started rallying big time. Okay, so this 265 is down to 185. This 337 is down to 235. Look, we already have 3,700 at 9,000. Guys, I know that sometimes you guys take profit, but you also got to learn. Listen, you never go broke by taking profit. That's my saying, and I don't tell anybody not to do it. I will take these $3,700 in any day, but you also got to let your profits run. You need to learn to let your profits run, okay? Because right now you're getting only a third of the almost $10,000 credit that this has potential, and it's only Tuesday, okay? So you have to let the stock do its thing. If your analysis is correct, and your confidence that you're trading what you're seeing, okay, the play will play out, because that means that other traders, smart money, are seeing the same thing. So you have to let your profits run. It's not a bad idea, again, to take 50% or to always take profit before a trade goes red. But you also, within that skew of risk management of your account, you need to have big winners, because you're gonna have losses. Okay, so you need to have big winners. Again, account 8361. Remember, we started at 7,086, and the night before this thing was at $6,000. Notice how this account is progressing during the day. Again, 8361, $10,000 already. And this is all mostly on Tesla. This is a credit spread. This is a gain on credit spread. This is not even buying the share. This is a credit spread. Look, I did this one. I snaked this one. I snaked this one at 3 p.m. while I was driving. My wife was actually driving. I was in the passenger seat. Okay. But look, I snaked this one while I'm in the drive-through in Chick-fil-A. While I'm in the drive-through in Chick-fil-A. Look, at 3 o'clock power hour, I snaked this trade. You have to take advantage of opportunity when this market gives it to you. Period. You need to understand the concept of what you're trading and what strategy you're putting in place and how to take the most out of it. Look, at this point right now, this account has doubled already. We started with $7,000 today, and that's putting in an $800 trade is the only reason it went to $7,000. Look, this account has virtually doubled within one trading session. Okay, look, this is the account starting with an $800 profit at 7,086, and by 344 it was already at 13,261. At 348, this is power hour. At 348, it's at 13,456. Okay.
So Jess, I have a question. I think, I mean, this is solid, right? Just being able to leverage the one account to be able to double it. But I think for most of us that are on here, we can't possibly leverage our entire account, for a play like this, right? So we'll be happy just making 10, 20, 30%, because especially if you're talking about letting the winners run, right? This you're leaving this till overnight. I think that a lot of us would be kind of scared to just let our entire account ride on a credit spread overnight.
Okay,
and so, go ahead.
Go ahead.
Yeah. So as far as taking profits, I mean, if it were me and I gotten a third, right, of my potential gains, I'll probably just cash out and know that I can sleep well tonight.
Okay,
so
listen.
How do you get past that, right? Where you just let it ride?
I'm gonna tell you right now. Okay, I'm gonna sleep well regardless, even if this is my only account, and I'm gonna tell you why. Okay. Don't get me wrong. It's never a bad idea to take profits. Ingrain that in your mind. Okay, whether it's 1%, 10%, 30%, or 50%. It's never a bad idea to take profit. But within your trading career, you're going to build accounts that you're going to able to take more risk and let runners run and manage the risk accordingly. Okay. Let me show you what's going on with Tesla. And this is why I initially took this credit spread. Okay. What have I been telling you guys about the MACD crossing? This is on a daily chart. Okay. This is a very powerful entry indicator. Very, very powerful entry indicator. Okay. Look at it back here. When it did a cross, okay, look at the price action this thing has had. This went from 900 to the top of $1,200. That's $300 right there. Okay, and this was based on a flattening of the MACD with a cross indicator. Again, ADX came in and spiked, confirming the cross, and Chaikin was also confirming accumulation, confirming the cross. It wasn't here until we got divergence on the top that it was telling you to get out, double top, divergence turning into accumulation, turning into distribution, and we went down. Okay. Now, what happened? Notice what's going on here. What's happening here? Volume is increasing, right? Volume got to this peak right here, and it started decreasing, and that's where it's already signaling you that a downturn is coming, MACD is flattening out, okay, and volume is going down. Sellers are coming in, and that's where you're getting the down. Okay. Moving forward to March 14, more or less. We got a tweezer bottom. What's going on with volume? Volume is steadily increasing up, above average for most part. Okay. We have a cross on the MACD. And look at the ADX. ADX violently spiked up. Violently spiked up. Okay. So if I'm not gonna trade the initial shares for a risk factor that it's already whatever, if I put $2,000, I can only lose $2,000, and I'm gonna do a credit spread. Okay. These indication of the strength on Tesla is telling me that this thing is gonna ramp up, and I will start looking for deep in the money credit spread to see if the volatility increases. It limits my risk, because if I get $3, I'm only risking $200 per contract. I'm only risking dollars per contract because it's $500 a contract. So I'm getting $300 of the $500. I'm only risking $200, and I'm gonna look for continuation. This thing on a daily basis has had no red candle. It busted over the 200-day moving average. I mean, the 50-day moving average, and it busted over the 200-day moving average, which are both bullish scenarios. Okay. It busted today the R1 pivot and closed near the top. Once it hits 1,000 to 1,025, algos are going to kick in, and this thing is going to go to $1,100 real quick. That was the mentality on the Tesla play, and that's why I took the credit spread, and that's why I'm holding it right now. I had, look, I'm in a big win-win right now, only for the simple fact that this one is a 940. I'm at the 950. Okay. Tesla closed today at, hold on, I'll tell you. Tesla closed today at 993. So on this spread right here, I got a $43 cushion. Can Tesla go down $43? Yeah, Tesla go down $80. Tesla go down $100. Okay. But seeing what I'm seeing here is very unlikely. There are always circumstances, black swans, and X factors. But seeing what I'm seeing here, you have to be confident on trading what you see. There's going to be a time that you're going to have to take these trades based on what you're seeing and the knowledge that you're obtaining and the knowledge that I'm teaching you. And within that concept, you have to be able to take these plays with confidence enough that this is what's going to do. If it does not do this, this is how I'm going to manage it. This is my risk factor. You got to have a plan, period. You need a plan entering every single trade in this market. You need an entry plan and you need an exit plan. And you need to understand that plan, follow it, okay, and execute it accordingly to what you're seeing on these charts, on the market sentiment, and on the experience that you're obtaining during all these market sessions that you've been trading this market. So I hope that answers your question.
Yes, it does. And you said something very important there, and I was thinking about it today when I was driving. I think it would be good to have kind of, what your thought process is as far as, all right, here's my target. Here's what I think is going to happen. If this doesn't happen, then here's what I'm going to do, right? So that way we learn about the exits. Because I think it's good that you give us the play and we immediately jump in. But for the most part, it's kind of hard for us to make up our exit plans ourselves because we're still learning. And I don't know if you remember, can you tell us when you're ready to get out of the Apple 165 play, right? Because those things are important. Most of the time, some of us may just hang on to the trade, not realize maybe you're out already, or not knowing where the exit is. Once we know that, it gives us confidence to be able to hold on, because maybe we can see from the chart what you're looking at and why you think, that's going to be your exit.
Let me tell you how I trade those Apple, because really on those trades, I really don't have an exit. I have an entry. And what I mean by that is that Apple Play was $300. I don't care losing $300. You see what I'm saying? But I have the potential to let it run, okay, and not blow up my account for $300. Granted, if you have a $1,000 account, okay, your risk factor and management is a little bit different than mine with a $3,000 account, let's say, okay. But those are the way that you set up your trades. Those are the way that you need to set up your trades and management, okay. On the Apple Play, I'm looking for a 52-week high in the next 14 days. That's what I'm looking for, okay. In the meantime, I manage accordingly. You're at 100% right now on that trade. Can you take profit and be good? Yes, of course. Take it. Take it. Okay. If I show you within 3 days a trade that went from 100% to 400%, don't get mad. You took 100% of that 400%. Okay. You're not going to hit 400% all the time consistently. But if you hit 100% all the time consistently, you're going to make a whole lot more than the guy hitting the 400% here and there. You know? So, yeah, go ahead.
The statement before you said, if you're not afraid to lose money, you will make a lot of money, right? And I think that I know there were some plays where I got 50% profit. I jumped out. I'm like, I'm good, right? And it went higher, right? But I think it comes down to experience, and it comes down to how much money you're managing, right? Because like you said, if it's $1,000 account and you make 50% on your money, I mean, you're happy. You're like, oh, I just made 10% of my money. I'm getting out, right? But I think it has to do with how much money you're willing to lose. And I think some of these plays, I think that's kind of the mentality. It's like, hey, this can go to zero and I'm okay with it.
Correct. You have to understand also, listen, on that trade that you took, let's say 50%, guys, go back to the chart and see why you took 50% and why the market went higher. You're not going to learn unless you backtrack your process. I look at every single play that I make, good, bad, or ugly. Look, OXY. Someone asked me, hey, what's your price target on OXY? I said, man, oil is going to continue to go up. OXY, Warren Buffett just got a $7 billion stake on OXY. I'm going to swing this, okay, until it hits about $61, $62, more or less, give or take, okay? It hit the 52-week high, I think it was yesterday or the day before, whatever, okay? That was my target. Okay? I did about 300% on that one. That's it. It hit my target. If it goes to $70, $80, oh, well, I could always get back in it with the house's money, not my money. Okay? So you have to start leveraging your account to where the profit you're making, you could reinvest it, okay, and continue to grow the account with that profit. And you will. There is no, remember something, okay? There is no secret sauce or template to say, I got into this trade. When it hits 57, 55, I'm going to get out for 300%. No, you got to remember that the market is a living entity. What that means is that the market is not mechanically nor robotic. It's being pushed up or down by people on the other side that have emotions like you and I. And what happens is that those emotions are either bullish or bearish. And those emotions are pushing price actions up or higher or lower. Okay. And that's what you need to be able to adapt, identify, and capitalize in. Guys, eventually you guys are going to become like psychiatrists. You guys are going to be the shrink doctor of Wall Street, because that's all Wall Street is. It's a bunch of psychopath crazy people, okay, trading companies with huge evaluation that will never be met, okay? And it's a huge gamble, good or bad, where they're picking companies and profit and pennies here and pennies there to make millions of dollars. Once you're able to learn the game, you're gonna be doing the same thing. I'm just writing the coattails of these millionaires slash billionaires. That's it. I know their game. I know that when this happens, this is the effect. Okay. There is no, listen, it's take me a little minute to readapt to this market, because since the market is a living entity, you have to continuously adapt to what the market is giving you. 15 years ago, if the Fed was pricing in 9 interest rate hike, there is no way that this market goes up 1-2%, man. It's physically impossible. Okay? Because the investor during that era would say, oh, there's something wrong. There's a red flag. And they will start selling the market off. You know what it is that the overnight Fed future rate went from a percent probability of 9 interest rate hike to 63% probability of 9 interest rate hike by December? That is nuts, man. And this market was up the way it is today. That is ludicrous and nuts, man. But yet it is. Do I care? No, I don't. What I care is to capitalize on the mentality of these ludicrous and crazy people that are making the market goes up. That's what I care. To be able to identify the mentality, the thinking, the thought process, the entry and the exits of the cases that are pushing this market the way they're pushing it today. I told you guys before in the past, unfortunately, this business is a little bit heartless. And what I mean by a little bit heartless is that the most money you're going to make is going to be when people are in their worst miserable stage of their economy and finances. I'm sorry to say it like that, but that is the bold truth. You're going to make a lot of money on other people losing money, losing houses, blowing up finances, and being miserable because of the way the economy is. That's what this business is about. And you have to put your emotions aside, factor in what you need to do, and at the end of the day, wherever you could help, like I said, and I say it before, I go out and eat. The other day I went out to eat with my wife at a Thai restaurant, and I gave the lady $150 tip for a meal that me and my wife spent about $280. The lady freaked out. She thought I made a mistake. No, I did not make a mistake. Because I know that the way that this inflation is going, there is no way in hell that anybody is able to make a decent living, even if you're making $15 an hour. That's what they push with this. Oh, we have $15 minimum wages. $15 ain't nothing with the inflation that we have right now. You're making less money than when you were making $7. The position that you're in right now in this is that at the end of the day, gas go to $15. Well, guess what? I offset my expenses by turning on the ATM machine on Wall Street and getting more money from them. You squeeze me, I squeeze you. That's how the mafia does it. You squeeze me, I squeeze you.
Boom.
That's it. That's it. The Italian had that down pat. Okay? And you're going to have to learn to do the same thing.
Hey, yes. Before you go, can we go over the Amazon trade real quick? The
Okay.
small account.
Here we go. The number one factor on Amazon is that Amazon has a 20-to-1 split. That's the number one factor that is greatly in our favor, that Amazon will most likely hold levels or continue to going up. That's why I took that trade on that small account, because it's a fairly safe trade considering the fact of what Amazon is doing. Number one. Number two, we have huge accumulation on the daily chart. We're testing the 200-day moving average, which if we break it tomorrow or the next day, we're definitely going to go to 3,400 really quick. We already went over the 50-day moving average, which is very bullish, and we were able to manage to stay above these pivots right here. Besides that, the Bollinger Bands are opening up, meaning volume is coming in, and within that volume that's coming in, price action is moving higher. ADX is going up, spiking up. It's been spiking up for the last couple of days while sellers start spiking down. So overall, Amazon should finish the week anywhere around 3,350, 3,331, 3,350, possibly even 3,400 by Friday. And that's why I took that for a continuation play of these huge white candles, which are buyers. Understand this. Look, the market is a storyteller. Okay. So Amazon popped off the spinning top. We have a little hammer right here, which is a trend reversal. We gapped up. We filled the gap with this red candle right here, basically. And then we started rallying up. Look at the size of the rally candles that on the top, the wicks are very small. That's extremely bullish. We got to this area right here, which again, it occurred a spinning top yesterday. A little pause, a little indecision. So everybody right there at that point is saying, hey, man, what do we do? Do we take profit? Hey, what do we do? What do we do? They're going to raise up interest rate. Oh, my God, the end of the world. But wait, this is going to split 20 to 1. So if I have 200 shares, that means that I'm going to get a 20 to 1 split. I'm going to get more shares. And Amazon is a good, strong company. No, I'm not going to sell. I'm going to buy some more right here. And that's what happened today. They bought some more. That's the Amazon play.
Thank you. Yes.
All right, I got like 5 minutes left. Anything else?
Take a deep breath, man. Take a deep breath, damn it.
Man, I'm just getting started right now. You know me. You know me from before. That when I say I'm gonna make a statement, my statements are real big and real bold.
Oh, you better take
Cowboy
it easy.
rider.
We gotta take a breather, bro. You know.
Breather. This is where I make my money. This is where it gets fun. This is where it gets exciting in the stock market. That when everybody's jumping out of buildings, okay, I'm going up the stairs going, go, who's next jumping? Go ahead and jump. Hey, by the way, I'll take that stock. Let me get that. Let me get that Apple. Let me get that Facebook. And let me get that Zoom. I got it. Don't worry about it.
Let's go.
Okay. This is where I get in the zone that you'll start seeing me really, really go crazy with this market.
Yeah, because
I have people telling me, I have people fearing me saying, oh my God, you must be losing millions of dollars. I say, yes, I am. I'm losing so much money that I'm buying a brand new C8 Corp next year. Yeah. Okay. Because that's the mentality of people. That's the mentality of the uneducated person in finances. That when they see the market go tank 1,000 points, it's not conceivable to them that you could make more money with the market going down 1,000 points than the market going up 1,000 points. Because you make your money quicker. Because fear sets in quicker than greed. And that's what I understand. So I'm just getting cranked up right now.
Well, let the games begin then. Shit.
Yep, they sure will. But anyway, that's what happens when I take a cup of coffee at this time. Any question, guys? Because I'm going to upload this video as soon as Zoom sends it to me.
I'm good if anyone else doesn't have any.
All right, we're going to leave it here. Tomorrow is going to be a Wednesday 0 DTE. We're probably looking for continuation tomorrow on Wednesday. Powell speaks tomorrow at 8 a.m. So by market open, we should already have digested what Powell has said. There's nothing else Powell can really say unless he tells me that he's going to go up 75 basis points, versus 50 basis points. So these are the key things that you need to look for tomorrow. Oil, if it continues to climb up, that's a red flag. Commodities, if they continue to go up, that's another red flag. Okay, but if oil is able to sustain this level and not spike up, S&P should go higher. One play that's being a sleeper right now that I want you guys to look at is uranium. Uranium is going to be a huge commodity play. Huge. Okay, so looking at some ETF I'm doing a research on some ETF on uranium, just like the wheat play that we did, that it was a sleeper. Okay, so that's what we need to look for tomorrow. Let the market digest the first 30 minutes, and let's see what we get, and let's see what the market gives us. And we wait, we pull the trigger, and we let the market dictate our profit. Don't FOMO, don't go crazy, chill. That this market is going to get really, really good the next 30 to 60 days.
It sure as heck feels like it.
All right. If nobody has any more, we're going to leave it right here and go get yourself some sleep. And we're going to be here up and early, 9:30 at the opening bell.
All right, Jess. Y'all have a good night. See you mañana.
Good night, guys.
Muchas
Good night.
gracias.
Thanks, Jess. Bye.
Yep.